Welcome to the Riskwiser Zone, the podcast where we dive into the world of stocks and finance to help you make informed decisions about your investments. I'm your host, Lewis, and I'll be guiding you through the latest news and trends in the financial sector. Today, we're starting with a story from the pharmaceutical industry, where Cybin Inc., a company focused on developing psychedelic-based treatments, has announced the results of its annual meeting of shareholders. According to the press release, the company outlined its plans for future growth and development, including its efforts to engineer proprietary drug discovery platforms, innovative drug delivery systems, and novel formulation approaches for mental health conditions. It's worth noting that Cybin Inc. is operating in a highly regulated industry, and any claims about the efficacy of its proposed products are subject to rigorous scientific research and clinical trials. The company has also emphasized that it's not making any medical, treatment, or health benefit claims about its products, and that regulatory authorities such as the FDA and Health Canada have not evaluated these claims. As we discuss this story, it's essential to consider the potential risks and uncertainties associated with investing in companies like Cybin Inc. The psychedelics market is still relatively new and untested, and there may be challenges ahead for companies operating in this space. However, some investors see significant potential for growth and innovation in this area. We'll be keeping a close eye on developments in the pharmaceutical industry and the psychedelics market, and we'll provide you with balanced and unbiased analysis to help you make informed decisions about your investments. That's all for now. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're diving into the world of finance and technology, where innovation meets investment. Today, we're exploring a fascinating story about Hydreight Technologies Inc., a company that's making waves in the healthcare industry. Hydreight has just announced a convertible debenture offering of up to $10 million, which is certainly an exciting development for the company and its investors. But what does this mean exactly? Let's break it down. A convertible debenture is essentially a type of investment that can be converted into equity at a later stage. It's a way for companies to raise capital while also giving investors the potential for long-term growth. Hydreight Technologies Inc. is a company that's building one of the largest mobile clinic networks in the United States. Their platform hosts a network of over 2,500 nurses, 100 doctors, and a pharmacy network across all 50 states. They are using technology to bridge the gap between provider compliance and patient convenience, which is a really interesting space. Now, when it comes to the offering itself, Hydreight plans to use the proceeds for general corporate purposes, which could include expanding their operations, investing in new technologies, or even making strategic acquisitions. The company has stated that they may require additional financing from time to continue their operations, so this investment will likely play a crucial role in their growth strategy. Of course, as with any investment, there are risks involved. The company is subject to extensive government regulation, and the healthcare industry is always evolving. There's also the risk that the offering may not be completed on the terms or timeline anticipated, which could impact Hydreight's ability to execute their plans. Despite these challenges, Hydreight's innovative approach to healthcare has garnered significant attention from investors and industry experts alike. Their commitment to empowering licensed healthcare professionals and providing convenient, high-quality care to patients is certainly commendable. As we consider the implications of this investment, it's essential to remember that the world of finance is complex and multifaceted. There are always pros and cons to weigh, and it's crucial to approach each opportunity with a critical and nuanced perspective. That's all for this segment of the Riskwiser Zone. We'll continue to monitor Hydreight's progress and provide updates on their journey. Stay tuned for our final story of the day, right here on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We've had a fantastic discussion so far, covering various aspects of personal finance and risk management. As we approach the end of today's episode, I'd like to shift our focus to the world of savings and investments. You might have noticed that interest rates have been fluctuating lately, and it's essential to stay informed about the best options for your hard-earned money. Our topic for today's closing segment is all about certificates of deposit, or CDs, and how they can be a viable option for those looking to lock in high interest rates. According to recent data, the Federal Reserve has reduced its target interest rate 3 times in 2024, which has had a ripple effect on deposit account rates. This means that now might be your last chance to take advantage of today's high rates with a CD. The highest CD rate available is currently 5.5% APY, offered by Gainbridge on its 5-year CD, with a minimum opening deposit of $1,000. When it comes to finding the best CD rates, it's crucial to shop around and compare options from various financial institutions. Online banks tend to offer more competitive rates due to lower overhead costs. It's also important to review the terms and conditions of each CD, including early withdrawal penalties and auto-renewal policies. Some CDs offer better terms for flexibility, such as no-penalty CDs, which allow you to withdraw your funds without a fee before the maturity date. We've identified some of the best CD rates available today, with options ranging from 6-month to 18-month terms, offering up to 4.4% APY. As with any investment, it's essential to consider your individual financial goals and timeline before investing in a CD. While they can provide a low-risk option for earning interest, it's crucial to weigh the benefits against potential drawbacks, such as locking your money away for an extended period. In conclusion, CDs can be a viable option for those looking to take advantage of high interest rates, but it's essential to approach this investment with caution and carefully consider your options. Remember to always prioritize your financial goals and risk tolerance when making investment decisions. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, invest with caution.